big sell-offs again. There's just simply not the liquidity to do so. It's gone. It's literally gone into physical markets. And if I'm a producer or a refiner or something, why would I want a price that's so volatile? I just want to know supply demand. People are owning a bar before it's put for sale. You have to own it before you can sell it, which tells me that if you put it up for sale, that's a proper price. I don't care what that price is. It's the proper price.
Right.
It's not a COMEX derived price. It's a physical price based on supply demand on the day, based on purely on that supply demand.
What's going on, everyone? Welcome back to the channel. So I came across this conversation between Craig Hemke and Andrew Maguire, and Andrew just made some absolutely wild predictions about where gold and silver are headed. He's talking about $8,000 gold and explaining why the COMEX silver market is literally broken right now with backwardation that's been stuck for 2 months straight. This isn't just another bullish take. He's breaking down exactly why the paper market is losing control to physical demand, and the numbers he's sharing are honestly jaw-dropping. You're definitely going to want to stick around for this one because the data he presents completely changes how you should be looking at these metals right now. And hey, drop a comment and let me know where you're watching from. I always love hearing from you guys around the world. All right, let's jump into it.
I want to remind everybody to get started. I mean, we are here at the end of November. It's about ready for the holiday season. Andy and I are recording this on Wednesday, the 26th. Friday is going to be Black Friday. Monday is going to be Cyber Monday. Give the gift that keeps on giving the whole year. Stop by sproutmoney.com. They'll soon have the holiday gift guide out. There's always great sales, great gift ideas within that gift guide. Just go to sproutmoney.com and set up your kids, your grandkids, get them stacking, get them to understand what sound money is. And a gift from Sprout Money is a great way to get started. Andy, let's do this. You know, we began this month with a rather sharp sell-off in the back half of October. Gold was about 8% from its highs, and silver was maybe 10+% from its highs. And oh, Andy, the doom and the gloom, and oh my gosh, it's all over. It was a bubble that had popped. Well, as we record this here on the 26th, spot gold's back up to about 4,200, which makes it up 5% on the month. Spot silver's back up to 53, which places it up almost 10% on the month. Just a bounce, or are we about ready to extend these rallies?
Well, I mean, you just outlined what was the classic wash and rinse cycle. And of course, you know what it is. I mean, it really annoys me. It's part of the system, but it really annoys me when I call them a pestilent group of speculators who decide that, hey, I'll chase momentum in any way. Now, these guys control, momentum traders control pretty much 85% of all the remaining open interest. Most of the open interest from real institutional guys disappeared. I don't want anything to do with that COMEX anymore. There are plenty more physical exchanges, and we know where they are, where they get treated better. If I'm a refiner, a producer, or anything anything where I depend on a real price, why would I have anything to do with this toxic mix of prices that sort of comes together? If I'm take a position, it's visible. There's only a couple of big guys controlling the book. And of course, they're going to take you out. Of course they will, and they do it on a regular basis. So, momentum traders, to answer your question, here's what happened. So they decide it finally breaks out. What do? Oh, we're going up this time. So they hang on to the coattails of what is actually a physically driven market. But they get so much bloated open interest. So all you need to do is, of course, in the meantime, the COTs, the same guys that we know that operate the LPMCL pretty much, same footprint in both markets. And what do? Go short against every single one of those guys, knowing, guess what? When we let's go to just about there, margin call. Oh, let's do another one. Bang, out they go. What they've done is they've literally popped the bubble. Thank goodness, good riddance to the whole lot of them, because essentially all that did was put them into the other mode of shorting the market with the same commercials taking the long side of them. So by the time we get this equilibrium that we were just talking about, these guys are pretty much out, long or short. They've just been rinsed of their shorts. So I think what we've done is just establish the next in the series of higher physically supported steps. That's been the process. And my goodness, be great. I mean, what, we're $2,000 up from, we're like $23 higher than the beginning of the year, over $1,500 higher in gold for the beginning of the year. I mean, you only have to step back and look, take the chart chatter out of it.
Okay, this is massive. Andrew just revealed momentum traders control 85% of COMEX open interest. And you need to understand what that means. These aren't long-term holders. They're speculators with massive leverage chasing dots on a screen. When they get squeezed out, the entire structure shifts. Look at November. Gold hit 4,200, up 5%. Silver hit 53, up almost 10%. But at the start of the month, everyone called it a popped bubble. That wash and rinse cycle, it's engineered. Commercials short against over-leveraged longs trigger margin calls. Boom, speculative froth cleared. But the physical market didn't care. Real buyers kept accumulating. Now, here's where it gets insane. Andrew said they're seeing $3,000 per contract backwardation going into December silver delivery. That should not happen. Backwardation means spot price is higher than futures, and it's been persistent for 2 months. That's screaming severe mispricing and physical shortage. The paper and physical markets have completely disconnected. Then he dropped this, $4 billion in SLV shorts. If everyone wanted their silver at once, it's not all there. This liquidity crisis isn't theoretical anymore. It's showing up in the price structure itself. The system is breaking.
Fighting like rats in a sack now, trying to short cover these massive shortfalls because nobody is there to help you anymore. And literally, you can't print silver. You can print more money to buy more gold at a higher price, but there just isn't the silver there. It's just not there.
Yeah.
So how the hell are they going to extricate themselves from this position? That's why they're in backwardation into a delivery month. Where does that extrapolate out?
Yeah.
To me, it's $80. That's where it extrapolates.
Well, let's talk about that because, again, if this time is different, gold consolidated below its all-time highs for 4 years, and then right at the end for about 3 months below 2,100, broke out March of 2024, and it's doubled. Silver's kind of doing the same thing, though maybe a little bit above its all-time highs. You mentioned that backwardation, and what Andy and I are talking about is the spot price being higher than the front month future contract price. The future has been the December contract for COMEX silver. And since October the 2nd, so now for 2 full months, that spot price has been higher, and that just shouldn't occur. And if it does, it should occur for like a day, and arbitrage should close that. Andy, the fact that it hasn't and that it persists, is this the new normal? And does this relate to what you're talking about, this kind of loss of leverage and control in that New York COMEX pricing scheme?
Yeah, and I think silver is the Achilles heel of this same group of people. LPMCL are just the 4 banks that basically control the cartel, basically. And I think their liquidity is completely blown to smithereens. All the institutional guys, as we've just said, they've exited. And now you can still access, as an institutional trader, I can then go in and tag the SGEI gold corridor, which is opening up big time. Can access an increasing number of vaults, gold and silver that can be traded with a real physical price that is much more stable than this unbelievable paper toxic mix that is thrown in. And it only serves. And I think the reason that we're seeing less volatility and the reason we won't see these kind of big sell-offs again, there's just simply not the liquidity to do so. It's gone. It's literally gone into physical markets. And if I'm a producer or a refiner or something, why would I want a price that's so volatile? I just want to know supply demand. People are owning a bar before it's put for sale. You have to own it before you can sell it, which tells me that if you put it up for sale, that's a proper price. I don't care what that price is. It's the proper price.
Right.
It's not a COMEX derived price. It's a physical price based on supply demand on the day, based on purely on that supply demand. That is how markets are supposed to trade. And we've been gaslighted, or many people have been gaslighted into believing that this huge COMEX volatility is the market. It just amazes me.
Right. And if we've all been waiting for that to change, that leverage that they apply gets stretched to a breaking point. We don't know what it is. All this talk about how much free float there is in London backing those games. And you always used to describe it to me that, they just take a forklift and move silver from one side of the vault to the other, right?
And they won't sell it. They won't sell it. They literally will not sell it. And they don't. If you remember years ago, we used to talk about, we have a big client. We go to UBS and we say, can we have X amount? They say, no, that's all you can have. Hang on, no, we will pay you for it. It's just like, just give us a price. No, you can't have it. And it's like, okay. So then it tells us what the game is. The game is make sure, if I'm a seller, I'm UBS or JP Morgan, I've got silver at this price. I don't want to sell anybody, but I've got to look like I'm making a market. So make sure that Samsung, Nokia, and all these people get their silver, because if they don't get it in time, they're going to come to the market and just buy everything.
The supply situation Andrew's describing is absolutely critical, and most investors have no idea how tight things are. He mentioned meeting someone who said it takes 20 tons of silver to make 1 gigabyte in photovoltaics. 20 tons for 1 gigabyte. We're talking thousands of gigabytes deployed globally for green energy, not even counting AI data centers exploding right now. Demand is accelerating faster than supply can keep up. Now here's what explains gold's behavior this year. Andrew said institutions are moving to 20% gold allocation. A few years ago, that would get you laughed out of the room. 0.5% was aggressive. Now 20% is the new standard. And these institutional buyers can't hold physical. They're mandated to buy ETF shares. So they're buying GLD, and that demand is sticky. They're not momentum traders. They're reallocating from 0 to 20%, and that takes time. That's buying pressure that cannot be shaken out. But here's what should make everyone pay attention. Andrew said the January gold contract is already in technical backwardation. This isn't just silver anymore. It's showing up in gold, too. The LBMA and COMEX liquidity spigot is broken. They don't have liquidity to pull prices back anymore. Traders are saying the COMEX is the only source of physical they can access in size, even though it's mispriced. The system is cracking.
The physical supply demand is being set outside of the LBMA ring fence. And so therefore, it's back to same as silver. If I have a bar and I have to own it before I can sell it, I need a real price. I want a real price. So I will only sell it to you. And the more you want, the more I want.
Right. So Andy is, given the pricing scheme and the structure of the silver market is the same way they structured the gold market. Is silver kind of the canary in the coal mine here in terms of the leverage being finally overstretched and getting ready to snap? Should we if the silver backwardation persists into 2026, do you think we'll start seeing that in gold too?
Yeah, because the January contract is already at par. Shouldn't be. I mean, so you've
Okay.
got backwardations in December, although the next liquid contract is March. But when
For
you look
silver.
at silver, sorry. So, but then if you look at February, January, that's already in
Teetering.
technical backwardation. So
Mhm.
it is happening. It is happening already, and now we're talking about 2026, and they're not even done. I think this morning I looked. There was still, I think, 2,000 odd tons of silver warrants floating
Yeah.
around in there, and the thing is, there's a lot of people that I know and who are saying, "Well, yeah, we bought, and we're taking delivery. We are taking delivery.
Mhm.
Why? Because it's the only source of physical that I can get to my limit, to my actual limit. I can buy that. And so if that's the only source of physical, going to be banging on that back door, out it goes. So how can that possibly be? And that's mispriced. It's so grossly mispriced. And furthermore, even if it was more expensive, people would still be lining up to get it because there's not enough on offer to meet all the demand. So it is a toxic mix. And as I say, that's why I think these guys are like rats fighting in a sack.
Mhm. So, Andy, as we wrap up, and like I said, here it's the end of November, we got 1 month to go. It's seasonally a very strong period for gold and silver and the mining shares. The next breakout's going to really catch a lot of people. I mean, like you said, it's been a really steady accumulation over the last couple of years of gold, moving up in 20% surges, and then these sideways consolidations, and here comes another one. We're probably sitting on the doorstep of another. I would suspect you are pretty bullish for 2026. But in my final question, what could upset the apple cart? A major economic slowdown that would ease the pressure on silver, or maybe stopping the central bank, reversing some of the central bank gold demand. What are some things that could potentially erase some of this really bullish scenarios for these metals?
Well, I think as far as gold's concerned, you've got two, for all the reasons that you've just said. What if there was a black swan event? What if things that there
Yeah.
are cockroaches running around? So if institutional buyers are in there, and I would forget everyone else in Asia who views it differently to people in the West have, but need that exposure, then obviously, as far as gold's concerned, then they've still got to allocate more and more.
When Andrew said he honestly believes $8,000 gold, people probably thought, that sounds crazy. But let me tell you why it's not. He mentioned they figured 4,500 gold by end of 2024, when it was at 2,900, and we're already past 4,200 in November. That projection was conservative and almost hit. So $8,000 gold isn't random. He's looking at institutional allocation that's still in early innings. These buyers are moving from 0 to 20%, and that process isn't done. It continues through 2025 and beyond. Now here's where Andrew nailed it with silver. He brought up the gold-silver ratio and called it what it really is. It's not God's ratio, it's a synthetic leverage ratio. That is the truth nobody admits. The 80-to-1 ratio has nothing to do with physical supply and demand. It's a paper construct built on leveraged derivatives made years ago, and they keep doubling down, thinking it'll get better. But it's broken. When physical markets determine price, and we're seeing that shift with Shanghai Gold Exchange gaining influence, that ratio collapses. If it moves to the 30s, we're talking $80 to $140 silver at current gold levels. Even with economic slowdown, silver demand isn't going away. AI and photovoltaic demand are structural, not cyclical. Supply deficit hasn't been priced in yet. Once physical price discovery takes over, that's the real move. So what do you guys think of this? Leave your thoughts down in the comments. Please like and subscribe, and I will see you in the next video.